Okay, in the previous class, I was explaining regarding uh, debt cum gratuity, section 10, subsection 10. Okay, debt cum gratuity. Gratuity is the amount paid by employer to employee after retirement or on the death of employee to the next of kin. Okay, so some part of gratuity is exempted from tax and some part is taxable. This is a gratuity I already explained, and the purpose of gratuity. For the purpose of gratuity, all employees are classified into three categories. One is government employee. For the government employee, total gratuity is exempted from tax. Already I told. Then second, for non-government employee covered under Gratuity Act, least of the three is exempted from the tax. Least of the three means 3 points are given. Actual amount or rupees 20 lakh or rupees 15 days salary. Okay, I already explained this. Non-government employee also least of the three is exempted and excess is taxable. Non-government employee not covered under payment of gratuity act. Okay, so three conditions are there. Least of the three is exempted from the tax. For government employee, central government, state government, and local authorities. Any gratuity received by the government is exempted from tax. Okay, is fully exempted from the tax. For non-government employee covered under Gratuity Act 1972, list of the following is exempt. First is actual gratuity received. Second point is rupees 20 lakh or 15 days salary. I already explained. 15 days salary means you have to take the last month's salary before his service. Okay. Last day salary into 15 divided by 26, you make 1 day salary you will get, and multiply by number of completed year of service. Okay, round years. If he served more than 6 months in the last year, you consider that as a 1 year. Okay, and salary means salary plus DA. It may eligible, may not eligible for retirement benefit. Remember this point. Okay, these are the 3 points. Least of the three is exempt and excess is taxable. Regarding this, I'll give you the table how to calculate the gratuity covered under Gratuity Act 1972. You take actual gratuity received and less exempted. Exempted means least of the three. Actual gratuity received you take first. Second, you take the maximum amount 20 lakh. And third, you calculate 15 days salary. 15 divided by 26 into last month's salary. Last month's salary into number of completed year of service or part thereof. Okay, round years you consider. And whichever less of these three is exempted from tax, you take to the outer column. And deduct in the outer column, whatever balance remains, that is the taxable gratuity. Okay. And these 3 points you have to consider. If the service exceeds 6 months in the last year, you consider as 1 full year. And last month's salary means basic salary plus DNS allowance. It may consider for retirement benefit, may not consider for retirement benefit. You take full amount. Salary plus DA. And next, regarding 15 days salary means 15 divided by 26 into 15 divided by 26 into last month salary. Last month salary into year of services. Number of years served. You have to make. These are the points you remember. Next is regarding not covered under Gratuity Act. It is already explained in the classroom. I'm only telling the highlights. Actual gratuity received is the first point. Second point is maximum 20 lakh, it is same. And third point is instead of 15 days, here is the half month average salary. Half month average salary. Average salary. You have to calculate average salary based on 10 months and half month average salary for each completed year of service. Okay. Only for completed year service. Part thereof is not to be considered. Part thereof is not to be considered. Remember this. And you have to consider the following points. Part of a year of service is not to be considered. Second is average salary is calculated on the basis of last 10 months. And third is salary plus dearness allowance. Dearness allowance is to be taken only if it is eligible for retirement benefit. Okay. In the previous case, eligible, not eligible is considered. But here, eligible amount of DA is to be taken. This is point you remember. Okay. And fourth point is 1972, 19 not covered in the Gratuity Act 1972. There are 2 points. If monthly last month salary is given, that is covered under Gratuity Act 1972. If every salary is given in the problem, we consider that as a not covered under Gratuity Act 1972. This is the point you remember. Okay. Next, how to calculate the exempted gratuity for employee not covered under Gratuity Act 1972. You take the gratuity received first, less exempted. Under that, you take 3 points. Actual gratuity, maximum be 20 lakh or half month salary for each completed year of service. You take the 3 points. Least of the 3 is exempted. You take to the outer column. Then deduct in the outer column whatever balance remains, that is called as exempted gratuity. Okay, this is the point you remember. And next is commutation of pension under section 10 subsection 10A. Pension is also given by employer to employee for the services rendered by the employee and the benefits given by the employee to the business concern. Okay, for the well-beings of the employee, employer provides pension after the retirement or on death of the employee. After the death of employee or after the retirement of employee, employer gives, and this pension is given by employer to employee monthly basis. And on the basis of the life of the employee, on the basis of future life of the employee, total amount of pension is calculated. Total amount of pension is calculated and it is paid monthly base, part by part. Okay, monthly base it is paid. Okay, and in some cases, some employees takes monthly base, and because of the financial difficulties, some employees take some part of the total pension at the time of retirement or death. At the time of death or retirement, some part of the total pension is taken by the employee, that is called as commuted pension, and that is to be taxable some portion and not exempted from tax by some portion. Okay. Then how to calculate this amount? Exempted pension depends upon the gratuity received. This is depending on gratuity received. Okay, so the employee is classified into 2 categories. One is employee received gratuity, employee not received gratuity. Okay. First condition is exempted pension when gratuity is received. Exempted pension when gratuity is received. Okay. In this case, half of the commuted pension is exempted. Okay. Out of total pension received, you deduct half of the commuted value, not received value. Remember this point. Here you make a mistake. Out of total pension received, you have to deduct half of the commuted pension, total pension of that person. Commuted pension of the person is to be deducted. Okay, half of the commuted pension is allowable deduction in case of gratuity received, and if gratuity is not received by the employee, then 1/3 of the pension, 1/3 of the commuted pension is exempted from tax. This is the point you remember. Only two sentences. One-third of the pension is exempted from tax if gratuity is received. If gratuity is not received, half of the commuted pension is exempted. Remaining part is taxable. This is the regarding pension, commuted pension. And monthly based commission received by employee is taxable under the head salary. This is the point you remember. Okay. 1/3 of the commuted pension is exempted, remaining is taxable. Then encashment of leave salary under section 10 subsection AA. Leave cash, encashment of leave means it is the benefit given by the employer to employee. Means annually some leaves are given to employee. If the employee avails those leaves, then there is a benefit to the employee. And if the employee will not avail the leave, then those leave salary is given additionally to the employee. Okay, that is called as encashment of leave salary. And the leave salary or earned leave, that is called as earned leave. These earned leave are differ from one organization to another organization and one type of employee to another type of employee. Okay. For example, annually there are 15 leaves. Annually there are 15 leaves given to employee. Okay. If he takes the leave, the employee will enjoy along with his monthly salary. Monthly salary will not be deducted. Remember, monthly salary will be given. Annually 15 days will be given as leave. If you will not avail or means use that leave, and whatever leave not availed, all the leaves will be accumulated, and at the time of retirement or death, those balance of leaves will be encashed. That is called as encashment of leave salary. And for that, the provision of the income tax is as under. For every citizen, it is the already explained one. And a exempted encashment leave salary for government employees fully exempt. Remember this. For government employee, it is fully exempted. For government employee, it is fully exempted. And for non-government employee, least of the 4 is exempted. Least of the 4 point is exempted. First point is actually encashment amount received, total amount received. And second point of limit is maximum rupees 3 lakh. Maximum rupees 3 lakh is exempted. And third is 10 months salary. 10 month average salary. Okay, 10 months salary. At the time of retirement, you calculate average salary of a month, and 10 months salary is to be third point. And fourth point is actual salary for approved period. And what is this leave salary as per the approved period? As per the actual period, what is the salary? Okay. Actual amount received, maximum 3 lakh, and 10 months salary. And fourth is you calculate the salary for the leave not used. That is the fourth point. Least of the 3 is exempted, and remaining part of the amount is taxable. This is the point you remember regarding encashment of leave salary. And next is, you see this chart. First, you take the total amount received as encashment. Then exempted, less exempted. First is actual encashment received, the same amount. Second point, maximum amount 3 lakh you take. The next is 10 months salary. First you calculate average salary of 10 month and divide by 10 and multiply by 10. Again, average salary of 10 month. Okay, actual salary for approved period. Approved period means how many leaves not used you take and convert them into 30 days as a 1 month. Then 1 month 30 days for 1 month salary, and you multiply by 1 month salary into number of months availed, then you will get the actual amount of approved period. Okay, you take the fourth point. And least of the 4 is exempted. Least of these 4 is exempted. You take to the outer column and deduct in the outer column. Whatever balance remains is taxable encashment leave salary. Taxable leave encashment. Okay, in this way you calculate this. Okay. Next come to house rent allowance. This is also important one. In each and every salary problem, this item comes. Okay, what is house rent allowance? It is the allowance given by the employer to employee during the service. It is the allowance given by the employer to employee during the service along with salary. Along with salary. This allowance is paid by the employer to employee to meet the accommodation facility to the employee. To meet the accommodation expense. To meet the accommodation expense of the employee, employer gives monthly allowance to the employee, that is called as house rent allowance. The employer if the employer provides accommodation facility in his own industrial area or in the own premises of the business, then that is called as rent-free accommodation. There are two options. There are two options regarding the accommodation. First option is the employer has to provide his own building, or he may take the building on rental base that may be provided to employee for accommodation purpose. That is the first one. And second one is, instead of providing the building for accommodation purpose to the employee, employer gives some allowance monthly as house rent, and employee is given freedom to live anywhere in the location, anywhere in the same locality. Okay, employee take the allowance. That allowance is paid to the owner of the building. He may permitted to live in the rented building outside the organization. That is called as house rent allowance. Okay, house rent allowance under section 10 subsection 3. And some part of this is exempted and some part is taxable. Okay, so in this house rent allowance, the least of the following is exempted from tax. First is actual HRA received. House rent allowance received is first point. Second point is rent paid minus 10% of salary is to be taken. Second point, rent paid to the landlord, rent paid to the owner of the building, and salary, 10% of salary is to be taken. And third point is 50% or 40% of salary. This point you remember, 50% of salary is to be taken for the 4 metropolitan cities. 4 metropolitan cities means Delhi, Bombay, Calcutta, Madras. If your residence is in these 4 cities, you have to take 50%. 50% is to be taken for 4 cities, Bombay, Delhi, Madras, Calcutta. And for the others than these 4 cities, 40% of salary is to be taken. Okay. Out of these 3, the minimum or least is exempted, remaining amount is taxable. Remaining amount is taxable. Okay. This is regarding house rent allowance. And how to calculate this? You see the calculation of house rent allowance. You make one particular column and two amount columns. First, you take the actual house rent allowance received, okay, in the outer column. Then less exempted under section 10 subsection 13A. Under that, first you take actual HRA, the same amount. Secondly, you take rent paid minus 10% of salary. You take rent paid, out of that you deduct 10% of salary. Salary means salary plus DA if eligible for retirement benefit. Otherwise, DA is to be eliminated. Then third point is 50% of salary for 4 cities, Bombay, Delhi, Madras, Calcutta. And other than 4 cities, you take 40% of the salary. Least of the 3 is exempted. So whichever is less is exempted, you take to the outer column and deduct in the outer column. Whatever balance remains, that is called as taxable HRA. Taxable HRA. Remember this. Okay. This is the point you remember. And maximum mistakes you make in the second point. Maximum mistakes you make in the second point, remember. Sometime rent paid is less than 10% of salary. Sometime rent paid is less than 10% of salary. If rent paid is less and 10% of salary is more, then you don't write the difference in the minus. Okay. And you put 0. You put 0 in the second point. Okay. If rent paid and 10% salary are equal, it is 0. And if this amount, maximum mistakes you make in this stage. If the rent paid and 10% of salary are equal, this amount is 0. And if the rent paid is less than 10% of salary, then it is in minus. Okay. In these two cases, and third one case is there. Sometime the employee lives in his own house and will not pay the rent. These are 3 points you remember. First case, rent paid and 10% salary are equal. Then difference is 0. In some cases, rent paid is less than 10% of salary. Then answer is in minus. And in some cases, employee says that employee lives in his own house and he is receiving the HRA. You take my example. I am living in my own house and government of Karnataka is paying me house rent allowance, which is equal to 10% of salary every month. I am receiving every month 10% of salary as HRA, house rent allowance. I am receiving. It is my real example. I am receiving 10% of salary every month. But I am living in my own house. I am living in my own house. Then if you calculate my exempted 10% of salary, let us consider my salary is 1 lakh rupee. Then monthly I am receiving 10,000. Actual HRA received is 1,20,000. 1,20,000 is the HRA I received in a year, and 1,20,000 is the first point. If you come to the second point, rent paid minus 10% of salary. My salary is 12 lakh. Okay, 12 lakh is my salary. 10% of that is 1,20,000. Okay, rent paid is, what is rent paid? I have not paid the rent. I'm not paying the rent because I'm living in my own house. Therefore, rent paid is 0. 0 minus 1,20,000 is equal to minus 1,20,000. So you don't write minus 0. You put 0 here. If rent paid and 10% of salary are equal, you put 0. If 10% of salary is more than rent paid, you put 0. If the employee is living in the own house, is in own house, you put 0 in the second point. Okay. Then which is the least among these three? Among these three, some of my student friends told me, if it is 0, you leave that, and in the remaining 2, whichever is least is called as least. No, it is very blunder mistake. Least of the 3 is the 0. Remember this. And 0 is exempted. Remember this point. Once again, I am repeating. 0 is exempted. The second point, the second point 0, then 0 is exempted, not the least of the 2. So 0 is exempted and taxable amount is full amount. This is the point you remember till your solutions. Okay. This is the theory part regarding exempted incomes. I already explained, and I'll take some examples on the exempted incomes. First, you see this example. Mr. Franklin, working in a Lina Limited, retired on 31st/12/2019. Gratuity received is 8 lakh. It is 8 lakh. He received gratuity rupees 8 lakh at the time of retirement. He was getting salary of rupees 20,000 per month. His salary is 20,000 per month, and dearness allowance is 10,000 per month. Okay, salary 20,000, dearness allowance 10,000. And 75% of the DA enter into retirement benefit. This is the condition. 75% of DA means 7,500. 10,000 is total DA. 75% of 10,000 is 7,500. He was served for 29 years and 8 months. 29 years and 8 months. Okay. The payment of gratuity under the Payment of Gratuity under the Payment of Gratuity Act 1972. The payment of gratuity was according to Gratuity Act 1972. This is the condition. Okay. Compute taxable and exempted gratuity for the assessment year 2020-21. This is the problem asked. Clear? You see here. This DA is to be considered fully if he is covered under Gratuity Act 1972. If he is not covered under the Gratuity Act 1972, instead of 10,000, it is 75% is to be considered. This is the point you remember. And 29 years, 8 months. 29 years, 8 months is nothing but 30 years. 30 years is to be considered if he is covered under Gratuity Act 1932. If he is not covered under Gratuity Act 1932, only 29 years is to be considered. Okay, this is the point you remember. He is covered under Gratuity Act 1972. Therefore, we calculate according to Gratuity Act 1972. Okay, calculation gratuity. One line is missed. I'll open the line before closing the problem. Okay. Of Mr. Computation of taxable gratuity of Mr. Franklin for the assessment year 2020-21. This is the table. First, you take gratuity received. Gratuity received is 8 lakh. Okay. Less exempted under section 10, subsection 10. Okay. First point, actual gratuity received, same 8 lakh rupee received. The same amount comes. Second point, maximum amount is 20 lakh. Second point. Third point is 15 days salary for each completed year of service. Round year of service. Okay. So I'll calculate. Salary is 20,000 plus 10,000, 30,000 per month. Per month 30,000 and 15 divided by 26 you have to take. 15 divided by 26 into monthly salary into completed year of service. Number of years served. 29 plus 8 months is nothing but 30 years. Okay, 30 years. So its answer is 5,19,231. 5,19,231 is the answer. Then least of the three is exempted. Least of the three means 5,19,231 is the amount least. This is exempted. You take to the outer column. You take to the outer column. So exempted amount is 5,19,231. Okay. Then you deduct in the outer column whatever balance comes, that is called as taxable gratuity. Clear? So you see the heading now. Computation of taxable and exempted gratuity of Mr. Franklin for the assessment year 2020-21. Clear? This is the method of solving the taxable and exempted gratuity. Clear? Okay, you see the next example. I have not solved the examples. These are the examples you have to solve. This is the second example. I will explain here. Mr. Anand is the employee. Gratuity received is 5,40,000. Gratuity received is 5,40,000. 5,40,000 is the gratuity received, covered under the payment of Gratuity Act 1972. He is coming under Gratuity Act 1972. Okay. So you have to take 3 points. First, you take gratuity received 5,40,000. Second point, in the exam sense, actual gratuity received 5,40,000. Second point, maximum limit 20 lakh. Second point. Third point, salary for the completed year of service. Okay. Salary is 13,260 into 20 into 15 divided by 26. 13,260 into 15 divided by 26 into 35 years, because 35 into by 4 months is there. So you leave 4 months, take only 35 years. Third point, and ascertain the answer. You will get the answer. Answer is 2,72,250 is the answer. You calculate it. And next point problem is third problem. You see the third problem. Mr. Vinay is an employee in Jindal Company. Retires in the month of January 2020 after completing 35 years service. 35 years service completed. Received 2,72,000 gratuity. Gratuity received is 2,72,000. First point. And 3 points you calculate. 2,72,000 is the gratuity received. He is coming under the Gratuity Act 1972. Monthly salary immediately preceding the date of retirement is 12,480. Okay. Compute the taxable and exempted gratuity. Means first point you take 2,72,000. Second point you take 20 lakh. Third point 12,480 into 15 divided by 26 into completed year services. It is, I think it is 35. Third point, you take whichever is less is exempted, remaining is taxable. This is third. And you see the fourth example. Answer is given in the problem. You go through this answer. Taxable is 20,000. Exempted is 2,52,000. Okay, this is the answer you calculate. And fourth example is Mr. Shivanand employee. Shivanand, employed in a private company, received 2,70,000 gratuity covered under Gratuity Act 1972. Covered under Gratuity Act 1972. He is here. He retired on 30th November 2019 after serving 35 years, 4 months. So you have to take 35 years only. At the time of retirement, his monthly salary is 10,000 and dearness allowance is 3,260 and HRA is 1,000. Only DA is to be considered. HRA is not considered. Remember this point. Salary plus DA only. Okay. This is the point. Remember. So in the first point, you take 2,70,000 gratuity received. Second point, maximum limit 20 lakh. Third point, 10,000 plus 3,260 means 13,260 into 15 divided by 26 into 35. Whatever answer comes, that is the third point. List of the three is exempted, remaining is taxable. Answer is given in the problem. You go through the solution and solve and find out the answer. Fourth example. And sixth example is example number 6. Mr. Gopi. Mr. Gopi is an employee in X Limited, retired in March 2020 after serving 35 years and 9 months. 35 years, 9 months means you have to consider 36 years. Received 10 lakh as gratuity. 10 lakh is the amount of gratuity received under the Gratuity Act 1972. Means he is covered under the Gratuity Act 1972. Okay. His monthly salary immediately preceding the date of retirement was rupees 4,160. 4,160 is the salary. Okay. 4,160 is the salary. Then they asked to calculate, find out the exempted and taxable. First point you take, sorry, this is 1 lakh, not 10 lakh. 1 lakh is there. First point, gratuity received 1 lakh. Second point, maximum limit 20 lakh. Third point, you calculate 4,160 into 15 divided by 26 into 36 years. Third point, and ascertain the answer. And come to this next question number 7. Mr. Franklin received 6 lakh rupee gratuity. Gratuity received is 6 lakh. Then worked in as a manager. At the time of his retirement, he was getting 18,000 basic salary, 5,400 per month DA. Okay, DA is 5,400, salary is 18,000. So you have to take the total 18,000 plus 5,400. I think 23,400 is the salary you have to take. 23,400 is the salary you have to take in the third point. And number of years served is 30 years, 4 months is nothing but 30 years. 30 years is the service. Okay, you calculate gratuity covered under Gratuity Act 1972. First point, 6 lakh. Second point, 20 lakh. Third point, 23,400 into 15 divided by 26 into 30. This is the third point. List of the three is exempted. You calculate. Okay. Answer is given in the last. You see the answer and solve it. Next, example number 8. Example number 8 is also based on Gratuity Act 1972. 9 is also based on Gratuity Act 1972. 10 is also based on Gratuity Act 1972. You solve these problems. Okay. Only point is salary plus DA is to be taken in the third point. Salary plus DA is to be taken. Per month salary plus DA is to be taken in the third point. And you solve the problem, you will get the answer. Okay. You solve example number 10 up to 10. Example number 10 answer is 1,75,000. It is given at the last. You see this. Okay. You solve the problem. One by one, you solve the